Good morning, good afternoon, good evening, whenever you're watching this. This is Taylor Watts from What's Investing, and over this month we have crossed our yearly goal of $50 in dividends. So as you can see here, in 2020 our total dividends received is $51.85. That's just as of today, and you can see that over the 2 years we've got our different values invested. This is a rough number because it's hard to go back and look at the fees and the kind of tax rebates and all of that, so it's a rough number, but it's pretty accurate. And then we've got our portfolio value up to that just before, and that includes our Hatch stake in Tesla, and then we've calculated our dividend yield from that to there, and our total unrealized gain / loss. And this number here is including the first year, so divided by 2, and then you'll get like our yearly unrealized gain / losses, so that'll be like 2.5. So we're doing slightly worse than last year, but way better in dividends. So yeah, as you can see, our dividends have been growing over the quarter, and yeah, September we've been smashing it. I think we've got maybe 3 more dividends for this month. 2 of them might be a bit delayed. I think McDonald's and Realty Income Corp might get delayed because Sharesies is having trouble doing all the US tax and that on the payday. But apart from that, I think we got Argosy on the 30th, which we no longer own, but we'll still get the dividend. And then yes, we're already past the $50 goal we had for the year in September. So we've got another 3 months. We got October, November, and December, and October's looking to be pretty good. I think we might get to like $8 in dividends in October. November I think will be pretty quiet as it was last year. It was nothing last year. We have a few monthly stocks now, which will be good, so we'll get at least $1 there easily. But yeah, December again we'll be probably looking at maybe 20, because I think we're looking at way more than 20, because Hallenstein's announced their dividends for December. And I think with my stake in Hallenstein's, we'll be looking at like $22 just from Hallenstein's. So we'll be breaking all the way up to hopefully $80 in dividends by the end of this year or more, which is insane because yeah, we set a goal back in an earlier video at like the start of the year talking about our goals for 2020. And one of them was just $50 in dividends, which I thought was realistic compared to having 15 the year before. But I didn't realize how much I would be investing over time. And so yeah, so these numbers here is last year's C4, Sharesies, Hatch, and then minusing the fees. So I think that's the Sharesies $30 for this year and 7.5 for the year before. And then there's Hatch and Hatch, so that's the transaction fee, and that's like the tax form and stuff. But yeah, it's been good, and I've kind of made a to-do list for myself. So it's just a to-do list is kind of like what I'm doing with the portfolio. So we sold some Turners, we changed our subscriber fund from the Global Water Fund to Triple M, as it makes sense as it is a dividend growth fund. I figured out that I didn't want restaurant brands either because it's not a dividend growth fund or stock. And this one I'm kind of gonna have to deep dive into all those NZ ETFs and see which ones overlap too much and just kind of thin it down. This I might not do because unless I see an opportunity, because I have a low cost basis on some of those below the current price, which means selling it to buy it to like remove the overlap would just mean my returns are less, but my portfolio is tidier. So that'll be case by case. I've kind of been on and off on the auto investments because I don't have a steady flow of income from a job as I'm studying, so most of the time I'm investing, it's just kind of like, oh, I've got some spare money in my bank account that I don't want to spend on like drinks and food and stuff like that, so I'll be like, oh, I'll just buy some stocks now. Oh, this one that I've been wanting to buy for a while is low today, I'm gonna buy that one. And yeah, so the auto invest will probably be on and off. I'm looking to auto invest into the funds, so then that can be a kind of brainless function, and when I'm looking into individual stocks, that can be the more focused and manual approach. So over time I've been increasing my stake in Tesla, but making it less of a proportion of the portfolio, as it is a super high percentage. We bought our super high yield ETFs and we sold our Smart Shares Global Bond for a better yielding global bond. And then this is just the video ideas, which we made that one. We're currently making this one. That one will probably be a part of the next video, which will be like the whole overview of September, which yeah, will be in that one. We might make a video like that and then I might be doing something soon in November. Yep, so we will dive into the Google Slides just to have a wee look. Yeah, so back at the start of the year we made a video talking about the future goals for me and a look back on the 2019 goals that I made. And our first slide was talking about investing $2,500. I'm not sure if I meant that to have a total of 25 invested or invest 2,500 more. I assume invest 2 means just 2,500, but we've smashed that. We're up to 7.2, and yeah, I actually don't know why I set that goal so low. I think I updated it in the other video to be at 5,000, which we've also gone above. And then the earning $50 in dividends, we have just passed that, and we have another 3 months to go, which is going to be super sick, as we're probably going to make upwards of 80. I think I may have already updated this one in a goal overview video earlier as well, and I might have been targeting for 75. But as this is the original goal, I thought I'd make a video just talking about my progress and my journey. And this make a 5% gain will also be a very close return. I think it'll heavily depend on the Tesla stock price near the end of the year, as that is about 20% of my portfolio. Because we're currently sitting at 5%, but that's over the 2 years, so we need to get that upwards to like 7.5%, 8%. As yeah, so 5% on that would be 8% here, I think. Actually, it's hard to really know because this money is a part of that money, but we could like remove the last year's invested and just do it off this year, but this value is also off last year, so it's kind of, I could be just hugely overlooking this, so don't quite know. But yeah, another thing, let me know how you guys' goals are going, because it's always awesome to hear how people are going, what's the good things, what's the bad things, and how everyone's going. So we'll just have a wee look at the portfolio and how it's been tracking along. So yeah, we're up at 4.31%. Lots of this is based on the Hallensteins announcing their dividend, as Hallensteins is my Sharesies' biggest holding. And I can show you that here on the weightings. So this was last updated almost 2 weeks ago. So I've kind of put in all of my stocks and then put it in here. So Tesla is obviously my biggest by a mile, and then we've got Hallensteins here, and it just goes down there, and our smallest being Nvidia. And yeah, so Hallensteins is our biggest on Sharesies, and it is almost 7.7, 7.1. So yeah, I gotta update this, but it's roughly 7-8% of the portfolio. I think I'll be looking to squash Tesla down. I'll be increasing my stake in it, but I'm looking to increase the stake in say AT&T, Pepsi, Coca-Cola, Johnson & Johnson, and stuff like that over time. Increase those more in a proportion to make this more spread out. But looking at the way Tesla's going, that might not happen, because diversification makes sense to be safe, but it doesn't make sense if you actually want to make a good return and you are researching the companies properly, because then you're just lowering your capability of a good return, which is kind of where I'm at now. Because I'm like, I was thinking about selling some of my Tesla, and then I was like, nah, that makes no sense, because it's not a sell in my mind. So I rethought that whole process, and yeah, that's where I'm at now. So yeah, that gains is mostly on Hallensteins, and I'll just show you the wee graph, how it's been bouncing along. We had a good run there, and then it kind of went squeezed a bit down here, and then it's been poof back up. So yeah, Triple M is down a bit. Most of the US stocks have been having a wee downslope. Some of our energy companies in NZ have been doing amazing. And yeah, so Hallenstein's announced their dividend here, and it went boom. And again, they announced their dividend back here for September, and that went up heaps. So I was buying all along before COVID, and then COVID came, and I was buying all along here. These are pretty big buys as well. And then as they announced that first dividend, I was like, oh, boom, because I assumed if they're announcing that dividend there, as they're going to announce their final year one, their December one as well, because it would kind of make no sense for them to announce the half year one and then just cut the final year one as well. That doesn't seem like a logical path forward. So as soon as they announced this, I just started buying way more, which made sense to me. So our stake in Hallenstein's went from, I don't know, here like 200 and something all the way up to 480, and it is valued in at over $610. So that is insane, and we're hoping this keeps going for the future. And we saw our biggest dividend from one payout being $13.56 in one go, and this is going to be beaten again in December at least $22, especially if I keep increasing my stake, as the dividend yield is still looking very smart for a great company. Yeah, so that is the video for today, just talking about how my growth is going. Again, these graphs showing that I'm growing and growing and growing those dividends, growing my returns, and yeah, we're looking solid, I'm hoping to decrease my inputs during October, November, December, as I'm looking to spend that money on myself in summer, have a break, and just tone down the, tone down the frugalness, I guess. But yeah, that's how we're going. I also put a number here looking at our average dividend per month for 2020, so it's looking at those and dividing it by the months, and that number is looking very smart. That is over $1 a week. It's almost like $1.30, $1.25 a week, or even more, which is that's just amazing to me, but of course we got to take into account the $30 for the year shares these things. So that's roughly $2.50 a month. So we've got to take that into account and take that away from there. But again, this is a fixed number. It is not going up, and this one has room to grow. It is gonna keep going up. So now we're just in the gains territory. We're just gonna keep making that buck. Yeah, so this is the video for today. Happy dividend, happy investing. Catch you later.